Hello everyone and welcome to Investing Angles, our market waves, your edge in the markets. Today we have a big agenda. We'll start with Volatility Index, then we'll move on into Dollar Index and also discuss TLT and bond market, particularly yields. After that we will discuss the major US indices and details of S&P500 and Nasdaq. After that, we will touch point on major stocks, including Microsoft, NVDA, Apple, Meta, and a few more. And later on, in our commodities section, we'll have a look at silver and natural gas. And wraps up our session today, two special features. We will talk about Bitcoin and we will talk about NIFTY, Indian Stock Market Index. Before we begin, make sure to subscribe to our channel and support us with your likes. Share the word around and follow us on different media. This is the daily closure of Volatility Index today. And what we are seeing here is technically the candles are bearish and we are moving lower at this point. Better chances for a continued lower volatility in the coming days. The only thing that I would like to mention here is the technical perspective. So something that I don't like, I'm really concerned about, is the 50-day moving average. It is curling up right now, and it crossed, and this one I'm talking about. This is the perspective for the blue line to go higher. It made a cross here, which is 50 over 200 days moving average cross, a strong bullish one. And that's the perspective for this one. So why it is curling up, we don't know, but we need to be really on our staying on our toes to make sure that we are prepared for a sudden move upward. That's the concern about volatility. Other than that, candles so far pointing downward. Now let's move on to the dollar index. What is dollar telling us? That's quite an interesting story here. So this is the 12-hour frame. Dollar is trying to form a bottom here, and that could be a fairly strong one. And today, the daily candle, it looks like it is closing with a strong bullish candle. And if we see a momentum building tomorrow, and the day after, in the next 2 days, we might see a fairly strong reversal here. And yesterday I discussed in one of our videos this potential for dollar index. This could be a bearish flag being completed, and if we see a strong momentum upward, then this would be a flag target. So we would see dollar targeting area between 110 and 111. That would be quite an impact on markets and dollar related instruments. So the next one in our agenda today is the yields. What we are seeing here, earlier today we posted a bigger video about potential bullish closure for the yields for the bond market. So you can see 5, 10, 20, 30 year, every single one closed with a strong bullish candle. And the fact that they moved above the Friday's high is very significant at this moment. This is a bullish inside up candle formation, which is an equivalent of bullish engulfing. That suggests that tomorrow we might see a continued rally. So the only one is behind is two-year yield. It hasn't it hasn't closed yet, but if it closes above the Friday's high, it will be an ideal alignment. Obviously, this brings a question about a bigger picture. So what we've seen here, this is the 10-year yield. The daily is bullish, and this was, I discussed this candle already. This is the 5-day frame which closed last Thursday, and this was the first harbinger of what's coming. We were seeing a very strong potential bullish reversal, and so far everything plays by plan. So candles knew on Thursday what's going to happen. And the weekly frame closed with a neutral candle. Right now it's building bullish candle. And the last one we are talking today is this the monthly frame, which we discussed quite a few times. Our projection at the end of January was that we would see a slight pullback and then potentially consolidation for 1 or more months and a move higher. So that's the perspective. It's still on the table, nothing changed. And obviously, if we have bullish move by yields, then it's gonna impact TLT. And this is what we are seeing here today. On Friday, there were bearish closures on multiple frames, including the daily with a hammer. And now, if today this candle closed a little lower below Thursday low, I would consider it a full reversal. However, it's still on track, and a strong move through multiple support lines, now resistance, particularly this blue line, 50 days moving average. So far, the daily 2-day frame is tracking for bearish closure, but it will be closing tomorrow. And the 8-day frame also closes tomorrow. So far, the candle is bearish, but let's see how it makes, what it does tomorrow. This is the chart that we've been tracking for a while, since February 7th. And we were expecting wave A, B, and now potentially we can see wave C of B being built here. And well, in this case, we might see a more complex wave. So far, the red count is primary, because we don't have a very clean impulse downward. So the purple is most likely nominal here. We would expect a move down and a more complex wave, consolidation wave, before the real move down starts. That's the perspective for TLT. Now let's talk about US indices. The closure today was technically somewhat neutral for Dow Jones and for IWM. For Russell, an interesting candle by Nasdaq. So technically it could be a hanging man, and if we see a strong move down tomorrow, it could be a confirmation. But so far, I would say this candle is somewhat neutral, and similar but not so strong for S&P 500. So S&P is signaling that it has a better chance to advance tomorrow. If we look at the futures are interesting here. So that's the closure today, and in 30 minutes it's important to watch. So if futures fail to close above Friday's high, it will be a bearish formation. If they move above and close above the Friday's high, it will be overcoming this doji and potentially moving higher. So the same, this is a doji, and we wouldn't have any direction today for sure for Nasdaq. But tomorrow will be an important day because we would need to see how this doji is dealt with. And for Dow Jones is the most concerning one, by the way. This is the 2-day frame, and this is bearish engulfing. It closes in 30 minutes. If it closes like this, we should expect Dow Jones to move lower in the next couple of days. And Russell RTY, it's kind of neutral, so it didn't show any direction. The only thing I'd like to point here is the 50 over 100-day moving average bearish cross. It could be instrumental down the road. Now let's have a look at Elliott Waves. So this chart has been unchanged for a while, since the end of January, and what we are looking for are two potential paths. So if the futures make a new all-time high, so technically this blue path will be not invalidated, but it will be with less probability. But right now we are looking for potential ending diagonal here, so this would be something that S&P 500 can develop here. So the waves are not impulsive, and the chances for a diagonal are fairly high. So, but it might take another week or two to fully develop. That's our take right now. A similar conditions for Nasdaq. There are two. That's slightly different structure, but nevertheless very close to what we are seeing in S&P 500. Potential either green or blue path. For the blue path to stay alive, it needs to close somewhere here in this blue rectangle and move on downward. However, if we see a stronger move towards a new all-time high and the green path, then we would consider this as wave 5. From a technical perspective and from Elliott Wave perspective, the green path is more dangerous because of, first of all, of the wave structure. And if this wave 5, potential wave 5, completes with a diagonal, we would be looking for a much bigger structure. Potentially the whole wave here that started in October 2022 could be completed now. And this wave, we might be looking for 50% of decline of the length of this wave. This how Elliott waves work. Well, but it's a bit early to discuss. Let's have a look. Let's wait for Rio closures. So far, the indices have a fairly good chance to advance a little higher. Now let's have a look at the closure of big stocks here. So first of all, Amazon is trying to build a bottom here. However, it's kind of interesting formation. So it's been trying for 5 days in a row, and there were no advancement at this moment. So far, it's staying below the resistance level, and the odds are clearly neutral. For Amazon, it is moving lower, and today it lost 50-day moving average and made an 8x20 EMA bearish cross. So Amazon is bearish. Apple is neutral. It formed a potentially bearish harami. It was held precisely within the range of the previous candle, and the next candle will be decisive. Tesla is kind of neutral, but it remains below the major resistance levels. So the next move would be instrumental. Meta finally made a strong move down with the bearish engulfing. If it continues tomorrow, it could be a bigger reversal, and we discussed Meta in our recent reports, where you can find them on our Investing Angles NVDA.com website. NVIDIA formed a neutral candle, which can potentially become a spinning top depending on tomorrow's closure, and Google is bearish. Now let's move on into the commodity world, and today we will talk about two of them. First of all, it's silver. What silver is forming right now, we've been tracking it very closely in recent days. So this was the latest our chart that we shared yesterday. So far, what we are seeing that silver is reaching our target, and this potential remains. What is happening right now, that this wave is not impulsive. I would say it's not impulsive at all, and most likely it is somewhat of an ending diagonal here. I would say this could break something like this, for example, but the wave doesn't look complete at this moment, and so far I would say it might go a little higher here, but definitely it is close to a reversal point. Let's see how far it would go. So we have quite a few, a lot of room here. Still can go to 33.8 if it goes, and the next day probably gonna be very important for one. So maybe we can see an even overnight move. So far, this wave been corrective, and the bigger channel remains like this. All right, so that's silver. And now let's have a look at natural gas. By the way, those who followed us since February, we made a call on February 1st when natural gas was about 3.1, and since then, so natural gas made 30% unleveraged. Well, that was a nice call, and we can see that silver followed our path fairly nicely. Now it is in the target area for wave 5. I would say that in the next couple of hours, probably tomorrow or overnight, we might see silver to natural gas to pull back, and we will discuss the most typical targets in our daily review for natural gas with our subscribers at investingangles.com. So if you want, you can join our website as a subscriber. All right, so that's all for commodities, and now let's have a look at our special features today. So Bitcoin, we issued a couple of strong alerts saying that Bitcoin is about to move lower, and this is the perspective targets for it, somewhere between 44 and 50, 48 and 55. That's based on our statistical analysis and the special call that we made 2 weeks ago. If you're interested, you can check our previous videos. We explain there everything in detail. So far, from the candles perspective, we are seeing that Bitcoin is following down, and this was our classical pattern that we identified back in February 2nd, and so far we are seeing that Bitcoin is slowly approaching the neckline. If it is broken, then we would be looking for 75K for the next move. And today Bitcoin is forming another bearish event. So this is 8 by 20 MA bearish cross on a 3-day frame, which is closing in 2 days. So we'll be looking for the next 2 days as an important heightening of a bearish momentum. And speaking about the long-term chart, this is our projection for Bitcoin if everything goes as we expect. So that potentially it could be moving towards 60 to 51. This is based on Fibonacci levels and Elliott Wave theory. And now the final feature of today is Nifty. So Nifty yesterday made a strong bearish death cross, 100 over 200 days moving average. Average is crossed, and technically it's a follow-up after 50 over 200, which happened 3 weeks ago. Now the bearish odds have escalated, and the weekly closure was also strong bearish. Everything is moving down. I'd like to emphasize this particular candle structure. This is a 2 months frame, which is closing in 9 days. And so far, Nifty is shooting for 3 black crowds on 2 months frame. That would be something very, very bearish and very, very significant. Those who follow us for years know that we pay special attention to these big patterns, and they are very significant. And speaking about Elliott waves, this is the perspective that we outlined back in October. So far it's been unchanged, and those who followed us already wrote down about 13% with Nifty index decline. So far that's been the first wave, potentially an impulse, and the second wave right now is being formed. So if you're interested, again, you can join our community as a reader and have a look at what we are offering for our members. That wraps up today's discussion. We've discussed many things, and tomorrow will be an important day from volatility and dollar index perspective. Also, the yields are very concerning at the moment because they can resume the rally, and it would impact not only TLT but the market as a whole. And I'd like to thank you everyone for watching our videos. Share the word around, subscribe to our channel, support us with your likes, and happy trading, everyone.